Good morning, everyone. I am People Kumar N.M., Assistant Professor of Commerce, Kursi Jayanti College, Bangalore. I'm going to introduce a subject called Accounting for Non-Accounting Executives. Course details. The course title is Accounting for Non-Accounting Executives. It's an open elective course. The course code is 21 COM 3T311. It's a 3-credit course. 30 hours is allotted for the subject. The internet level is certificate. The cross-cutting issue addressed is professional ethics, and the needs scattered by the course is national level. Course objectives and outcome. After completing this subject, students will be able to understand the basics of accounting. They can understand the transactions and company annual report, etc. The course is classified into 5 units. Unit 1, Introduction to Accounting. Unit 2, Transactions and Recording of Transactions. Unit 3, Preparation of Financial Statements. Unit 4, Company Accounts. Unit 5, Management Reports. Unit 1, Introduction to Accounting. Accounting is a very familiar term among people. They are always using the term accounting, accounts, accountancy, etc. What is the exact meaning of accounting? Accounting is the process of recording financial transactions pertaining to a business. The accounting process includes summarizing, analyzing, and reporting these transactions to oversight agencies, regulators, and tax collection entities. The financial statement used in an accounting are concise summary of financial transactions over an accounting period, summarizing a company's operation, financial position, and cash flows. The simple meaning of accounting is it's a language used by a business organization to express their operations for a certain period of time to the stakeholders. Definition of accounting. The American Institute of Certified Public Accountants had defined accounting as the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions and events which are in part at least of financial character and interpreting the results thereof. This is an elaborate definition given by American Institute of Certified Public Accountant. And by looking into this definition, we can understand the real importance of accounting. It's not just preparation of books of accounts. It includes recording, classifying, summarizing in a significant manner and in terms of money. Any transaction which can be considered as a monetary transaction will be taken for preparing the books of accounts. So that is the interpretation of this definition. Objectives of accounting. There are 7 objectives given here. From the first objective, recording business transactions systematically, determine profit and or loss incurred, ascertaining financial position of the firm, assisting management, assessing the progress of business, detecting and preventing frauds and errors, communicating accounting information to various users. These are the objectives of accounting. First one is recording business transactions systematically. It is necessary to maintain systematic record for a business transaction as it is beyond the human capability to remember such a large number of transactions and events. The chances of skipping the transactions and events are very high. In order to avoid that, we should have a system for recording the business transactions and events for a certain period of time. The second objective is determining the profit earned or loss incurred. In order to determine the net results at the end of the accounting period, we need to calculate profit or loss. For this purpose, we need a system which should provide the information for understanding the profit or loss earned by the company for the accounting period. We have to prepare the financial statements like income statement, position statement, so that we can understand whether the company is in profit or loss for the previous year. Third objective is ascertaining the financial position of the firm. There are two concepts you should remember on the financial position of the firm. The first thing is the preparation of income statement. After preparing income statement, we will be able to understand the operational results of the organization, whether the company is in profit or loss. While preparing balance sheet or the position statement, we can understand what all assets owned by the organization and liabilities owed by the organization towards the outsiders. So, accounting objective is ascertaining the financial position of the firm. The fourth objective is assisting management. The systematic accounting helps the management in effective decision making, efficient control on cash management policies, preparing budget and forecasting. Management want to take decision based on the financial results and the financial statements. They should understand the financial statement. They should interpret the financial statement so that they can take adequate decision to the organization. In order to do that, the accounting assists the management in taking decisions. Without the accounting information, the decision made by the management will not be right. So, financial accounting or accounting helps the management in decision making. The fifth objective is assessing the progress of the business. Accounting helps in assessing the progress of the business from year to year, and accounting facilitates the comparison of both inter-firm as well as intra-firm comparison. The progress of the business can be understood by evaluating the financial statements like income statement and position statement. Not only these two statements, we will be preparing other statements like cash flow statement, then fund flow statement, comparison statements, etc. So by analyzing these financial statements, the company can understand whether they are progressing or they are going in the wrong direction. And they can also understand whether the company's internal activities are strong enough to meet the demand, or the external activities of the company is very, very relevant for competing with their competitors. So the fifth objective is assisting the progress of the business. The sixth objective is detecting and preventing frauds and errors. While preparing financial account, the chances of detecting frauds and errors are high. In order to avoid the frauds and errors on books of accounts, there are many mechanisms implemented by organization. And if the results provided by the accounting is wrong or is not fair, it will have a huge impact to the stakeholders. So that is why detecting and preventing frauds and errors is one of the objectives of accounting. The next objective is communicating accounting information to various users. We know that the company is ought to provide many information to the public, not only the public, to the stakeholders. There are various stakeholders in an organization like creditors, suppliers, customers, government, then other intermediaries who are part of the organization. So it is the responsibility of the organization to provide the accounting information on time. So how they are going to provide accounting information is through annual financial statement or annual reports. So in the annual report, we can identify various financial statements, various information related to the organization, etc. So that helpful for them to take their own decision, whether they should continue the relation with the company or not, whether they should charge more taxes, or whether the investors want to move from this company to another company, etc. So that is why communicating accounting information to the various stakeholders is another objective of accounting.